Why? Because the war with Iran is over and the Dubai market is coming back. This is what every Dubai broker is screaming about right now. Aren't you ready to celebrate? Dubai brokers are calling clients right now. Same message. War is over, deal signed, list your property. Market is bouncing back just like after COVID. Some are even calling the entire thing a missile crisis. Not a big deal, just some temporary inconvenience. Well, let me dilute this euphoria with some cold shower, because in this video I'm going to show you 4 reasons why all of these sentiments are wrong. Plus, one number your broker is hoping you will never see. Stick around. The data gets uncomfortable fast. So let's start with that notorious deal itself that everybody's talking about right now. US and Iran signed a memo this weekend. Attention, memorandum, which is not the final peace agreement. This is what many people misunderstand. 14 points. Here is what matters. Ceasefire. Final deal in 60 days. US lifts its naval blockade. Iran keeps Hormuz open for free for 60 days. Then it gets one-sided. A $300 billion reconstruction fund for Iran, oil export waivers, frozen assets unfrozen. Brett McGurk negotiated with Iran under 3 United States presidents before, broke it down simply. Iran's only real obligation expires in 60 days. Everything after that is America giving things up. And the nuclear question, the actual reason the war started, got pushed into the final deal that doesn't exist yet. 3 days after signing it, Trump publicly said he's unhappy with it. While Iran is calling it a United States loss and already planning to chart the Hormuz access once the 60 days end. So what we have so far? A guy who's already regretting what he signed, and the guy who is planning to start charging tolls the minute the deal expires. Sounds very stable, right? Do you agree with me? Looks like the brokers got ready for a party a little bit too early. And yeah, Israel was not even invited to the party. Israel started this war, and Israel isn't even at the table in Switzerland on the 19th. Imagine throwing a party about ending a fight you started and not inviting yourself. Netanyahu got benched on his own conflict, and inside Israel, people aren't calling this a win, but seeing it as a Netanyahu's personal defeat. Iran was his life project, and he wasn't even in the room when they wrote the ending. So now Israel's sulking from the sidelines. Defense minister says that troops are staying in Lebanon, Syria and Gaza indefinitely. Netanyahu still saying Iran will never get a nuke on his watch. Translation? Fine, have your little ceasefire party, I'm still doing what I want. Count the guests at the peace table. Trump signed it and is already complaining about the food. Iran signed it and is already planning to charge a toll the second the clock runs out. And Israel didn't even get a seat and is loudly telling anyone who will listen that this party sucks anyway. That's not a peace deal. These are 3 people who all hate the wedding photo. Now, keep that image in your head, because we are about to look at what's actually happening to Dubai market prices, while everyone argues about the photo. And here are 4 reasons why I guarantee you that the market will not bounce back within the next few years. Once the situation with Iran got escalated, every broker was saying, hey, that's just a temporary shake. Remember what happened after COVID back in 2020? Well, here is why this comparison is completely wrong. Let me remind you that before COVID, Dubai prices had been falling since 2014. So COVID just hit the bottom of the market. Anything after that had nowhere to go but up. This Iranian conflict hit the opposite spot. End of 2025, analysts were already warning about up to 15% correction in 2026, before a single missile flew. The war didn't cause this, it sped it up. Now look at the actual momentum. From 2021 to 2025, Dubai sales prices climbed almost every single month. Peaks of 2.5%, then 2.4%, then 1.7%. 5 years of almost uninterrupted growth. And let's look at the most recent reading, minus 1.2%. This is the first negative month in 5 years. You can see it on the price list itself. Peak of 1,877 dirham per square foot. Now at 1,815. That's not noise. That's the trend that's finally catching up to what the monthly number already told you. And off-plan sales volume confirms it from a completely different angle. Down from 270 deals per month to just 31 88% collapse. It means that off-plan didn't slow down. It basically stopped. And it gets even worse from here. While sales prices are slow to move, rent moves first always. Look at the graph. Current rent peaked at 128.8 per square foot. That's 24% above the previous all-time high back in 2014. This cycle did not just match the last boom, it blew past it. And the very next reading already dropped to 123.1. Asking rents tell the same story from the listing side. Peaked at 207 a square foot in November, down to 173 in May. That's 16.5% in 6-month correction. By the way, villas got hit worse than apartments. Villas yields dropped from 6% to 4.5%. The payback period jumped from 17 years to almost 23 years. While apartments barely moved, still around 7% average rental yield, villas are now overpriced for what they actually earn in rent. Rent always drags sale prices down behind it. No rent, no yield, no reason to hold the asset. And we understand that Dubai market is primarily driven by investors. And now watch the sale side finally catch up. Asking prices for sale held rock steady for 9 straight months. Then, in May, for the first time in the entire data set, it cracked. Down to 3.3 thousand per square foot. We're talking about median price. Rent cracked 6 months ago. Sale prices are just now starting to follow. That's the exact lag everybody keeps ignoring. But here is the number that should really make the picture crystal clear for you. New leases this quarter only dropped 1.4%. Looks fine, right? Renewals dropped 17%. Why is this gap? Because landlords are quietly slashing renewal prices to keep tenants from leaving. I'm seeing this firsthand. Tenants are getting real discounts behind closed doors. Public asking price is just slow to catch up. That 17% is the real number. Landlords are already blinking, and nobody's telling you that on Instagram. Reason number 3 is that the speculators are gone. When we look at off-plan sales volume, it crashed by 88%, but the price per square foot barely moved. Still near 3,900 dirham per square foot. And it's not just volume. Total money moving through this market collapsed too. Off-plan deals went from 870 million dirhams a month at the peak to 220 million. Secondary market ready stock went from 1.2 billion down to 380 million. That's the entire market shrinking by more than 2/3 in 6 months. More supply is coming whether anyone wants it or not. 526,000 units under construction. Over 600,000 units already built. That's an 82% jump to total stock. Mostly studios and one beds, by the way, the most competitive segment in the city. And rising construction costs on top of falling sales, small developers get squeezed out first. And I promise you, some of them won't survive this cycle. Now, you will hear a counter-argument, Abu Dhabi just posted record sales. Well, let's actually look at that, because it's not what it sounds like when you look at the numbers versus marketing pitch and media headlines. Abu Dhabi sales momentum hit 4.1%. Its strongest month ever recorded, stronger than 2013 boom. And the next reading? Minus 0.4%. First negative print after the best run in the dataset history. When we look at rent, it's even more dramatic. 3.4% an all-time record. The every next month, minus 1.9%. The sharpest single reversal in over a decade of data. So the news about raising the rent increase in Abu Dhabi sounds even funnier at this background. So Abu Dhabi isn't immune to this. It rode the exact same wave Dubai did, hit record doing it, and now it's turning over just as hard, and some readings harder. Yes, Abu Dhabi has way less new supply coming, only 35% more units being built compared to what's already there. Dubai is building 82% more. And Abu Dhabi's occupancy is at 89%. Almost everything is already rented out. That's why Abu Dhabi falls less hard, not because it's not falling. Record sales in Abu Dhabi isn't proof the region is fine. It is just the peak right before the same turn Dubai is already in. And here is a pattern showing up in both cities at once. And that's one of the brightest indication of the late market cycle. In Abu Dhabi, asking prices for sale are still climbing. 1.3 thousand to 2,000 a square foot. But when we look at actual transactions, they already peaked and they are falling now. Sellers are still living in the old logic of overpricing their property, while buyers are not willing to pay that price anymore. Same gap we see in Dubai. Sale listing prices held flat for 9 months before finally cracked, while the real transaction trend had already peaked and turned down a month earlier. This gap isn't a contradiction, it's a tell. It means that sellers haven't accepted that the peak is behind them already. They're still pricing to last year's high, while buyers are only paying what the new reality actually supports. The gap always closes the same way. Sellers at some point stop denying it and asking prices fall to meet their transactions, not the other way around. To summarize, if this ceasefire breaks, and given 3 unhappy signatories, that's not exactly a fringe scenario. The bounce everybody is expecting won't even happen. But here is the real issue. You cannot sell a property in a day. Pain shows up late and it clears even later. The deal gives you a 60-day window. Property deals take months. By the time anyone knows if peace actually held, that window already closed. I'm not saying the market is crashing, but I'm saying that the narrative that is just a missile crisis ignores everything the data is already showing. Correction that was coming anyway and just posted the first negative months in 5 years. Rent rolling over from a record 24% above the last boom. Off-plan buyers who already left while sellers haven't accepted it. And even Abu Dhabi, the market everyone's pointing to as proof things are fine, quietly posting its sharpest reversal in over a decade. And remember that waiting for that nobody liked. Ask your broker if he factored any of that. I run this kind of analysis before any client buys or sells, link is below. And here's the thing nobody at that party is saying out loud. The market of opportunities is ahead, not behind. Smart money buys from the people who bought when it was high, not the other way around. That's exactly the kind of deal I track at belowmarketdeals.ae. Check it out and see you in the next video.